Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. With the latest run-up in the stock market, we thought now would be a good time to get an updated read on issues affecting the market. We're going to do that with our ETF Research Director Nina Mishra and equity strategists Dave Bartosiak and Brian Bolin. And Dave, I'm going to start with you. Now, we were talking off the air. Latest market run-up as far as consecutive string of positive days has been the best since the past 6 months, correct?
Yeah.
And so in light of that, you say valuations are an issue.
Yeah, I mean, we saw the really high flyers, get beat up a few weeks ago. So I think that sort of, flight to quality sort of took place. And that's part of the reason why we've seen this slow and steady kind of run up over the last few days and nothing that crazy. We haven't had that huge, big up day. It's just kind of been slow, low volume kind of winding upwards.
Slow and steady, not necessarily bad, though.
No, not bad at all.
Okay. Nina, you say earnings are still an issue as Q1 earnings continue to flow in. But let me ask you this. With this latest winning streak that the market has staged, it seems that investors are ignoring the negative earnings that have already been reported and just keying in on the positive ones. So when it's all said and done, is Q1 earnings season just going to be a blip on the radar?
I think it's a little early to say that. This week is going to be very important. More than 150 S&P companies are reporting this week, including some of the heavyweights like Apple, Amazon, Facebook. So we will see. So far, the earnings have been boring, a mixed bag. Expectations have been very low, and about 66% of the companies managed to beat estimates. Revenue beat ratio has been a little lower than earlier quarters, a little less than 40%. But still, while overall earnings are a mixed bag and investors are ignoring, but they are still rewarding the companies which are coming out with better than expected earnings. So not very different from earlier quarters, but they do matter.
All right, Brian, gaming the Fed and Janet Yellen is on your radar as an issue.
Yeah, I think the market is looking to every time that Janet speaks, what is she going to say? They're trying to get a read on, how is she perceiving the markets? What are the data points that she's looking at? The last several months have been about making easy money, and that easy money has been courtesy of the Fed, whether it's been QE1 or, Dave, what would be next, 2? And then 3, QE 37. There's so many QEs out there, and that's easy money that's out there and available for some traders, and that's a reason for the equity markets to move higher. We have to look to her to see, is the taper going to move any faster than expected, or is there going to be any sudden shifts?
Dave, you think earnings, I want to get back to that earnings concept that we just talked about with Nina. You think earnings are going to actually help to split the market, point investors to higher quality names? Is that because of the positive reports that are going to be coming in?
Yeah, some reports are going to be better than others, and the market's going to kind of rotate towards those names.
But they're not going to lend fuel to the rally.
No, I don't think it's going to be a broad-based rally because earnings haven't been, across the board great for everybody. So it's going to be kind of a select few, and it's going to be a stock picker's market like we thought it was going to be all year.
So the technicals are in vogue now over the fundamentals.
Yeah, I think over the short run, you always have that. He's going to strike a pose now with the in vogue. He'll start singing over here.
It's because he has his red jacket.
He's got the red jacket.
Right.
He's ready.
Right.
Strike a pose.
Yeah, right. So over the short term, you almost always have the technicals kind of fueling things, but the fundamentals are kind of the longer story. So you see throughout the course of the month there's these certain levels that pop up, and the market will find support there almost magically. And then there's levels where there's resistance where it kind of gets slapped down. And if you look at it day to day, you see those levels clearly on a month-to-month basis. So
then why are investors, this is the $64,000 question, why are investors, many of them, still reluctant to get into this market?
I think interest rates are still lower than we expected earlier. I mean, the interest rate rise has not been as expected earlier. They're still low, so investors are still not seeing those kind of losses that we expected on their bond funds. So once the interest rates start rising and they see their losses on their bond fund statements, then probably they'll start leaving their bond funds, start investing in stocks, and that may be a little bit late then.
Makes sense. Brian, what do you
Yeah,
think?
I think the low volume on any up day is definitely the sign that there is no conviction behind the positivity that's out there right now. You know, I'm bearish and I'm expecting a pretty significant pullback, and I would say that sell in May crowd is just kind of gathering its picks right here. Which stocks are we going to sell? I think they've already been selling the biotechs and the social media stocks and all the large PE stocks. I think you're going to see that, even while there was that flight to quality, I think that those names are going to get hit eventually too.
So quickly, you still think the sell in May and go away?
I definitely think that's going to
applies?
be one of the catalysts for a very large downward move.
Okay, thank you all for that. We're going to get these folks' top stock picks for this week, and that's in our next segment, so you want to be sure to watch that.